Welcome to our first live stream. What we're looking at now is the indicators and influences that are on the ASX. So this is where we look at the things that are influencing the Australian market, and we're going to dissect it and look at different cross sections to see what's pushing and pulling the forces and driving the top performing companies on the ASX that will serve things through shares in play on a consistent basis through the other videos on this channel. So this is Final Market Points, where we connect the leading market themes and the top performing companies for better trading. Now, what we look at here is these thematics, these aspects of the Australian market that are driving it higher. So we come over and have a look here on the left. We're going to look at a few different charts. So we'll start off with the one on the right, and I'll just make myself a bit smaller so that you can see those on the right. There we go. And if you want to like the channel, like the video, then that can help support the channel. Subscribe for updates and comment below to let us know which indicators you're using to look at the Aussie market and understand which way you're trading it. Now, first off, if we have a look on this right-hand chart, the top line here is a green line. And what that's looking at is the Aussie market, or the XJO 200, the top 200 on the Aussie, versus the bonds. So it's a bonds indicator. And what we can see is that since about the last 6 months, there's been a consistent move where the Aussie has been climbing. It's not a rocket scientist required to tell that the Aussie has been climbing and bonds have been going nowhere really fast. But that's still an indicator that we want to look at and drill down to see how it's influencing. We move down to the next one and have a look to see this white line. Now, what that's looking at again is the utilities. So we're looking at whether we're going risk on or risk off. Generally, when the market is going up as a whole, we're seeing that the XJO is outperforming the utilities index. When we do see the market getting hit really hard, we see money coming out of the market, risk-off situations. We do see that the utilities start to go up and the market's coming down. So that's where we see this white line coming down. As you can see, again, definitely for the last 12 months, we've been in a more risk-on scenario where the growth companies that have a higher PE and a higher beta have been running higher, and that's been outstripping the utilities index. So we see it climbing higher and higher and higher. In a bearish scenario, we see this indicator dropping. The next one is this dark blue line. What we're looking at here is the short index in the US versus the S&P 500. We don't have as good indicators in the Aussie market, so this does tell us whether we're getting huge ramp-ups in the shorted companies, which we saw with Wall Street bets and ASX bets earlier in the year and late last year. We saw a lot of those short squeezes happening and ramping up the market. So if we see this indicator going through the roof and the index going through the roof, we're a bit concerned there to see, well, is this sustainable or is this just a short squeeze? So what we do see is that the US was down last night, and we can see a bit of a movement here that has been coming up the short index, but the market has not been roaring higher, so it's a bit of a balance or a reweighting. We're not too concerned with what that's telling us right here. We come down for the next one, which is the red line. Now, because the Aussie market has a lot of mining companies in it, we have a large weighting towards the mining companies, and we'll have a look on the market map here. Again, just on the right hand side, you can see that a large portion of the Aussie market, we're looking in pre-open, that's where we are at the moment, but you can see that we haven't started trading, but most of them are looking to trade down on the match. On the top left hand side, this is the materials sector. So we've got BHP, Rio Tinto, Fortescue, they're the large companies, and you do see that makes a massive portion of the Aussie market. And then the bottom right-hand side is the financials, top left is materials. So mining is a large portion of the Australian market, and we'll flick back to have a look here to see what these indicators look like and how they're pointing for the Aussie market. We have seen that materials have been performing reasonably well over the last month and couple of months, but definitely you can see that climb. Since mid-late March, it has been climbing up. So again, no rocket scientists to tell what's going on there. Then we have a look at the metals against the Aussie, so that's against the dollar in the red, I should say, the Aussie US dollar. So we want to know whether it's the dollar movement that's actually driving the BHPs, commodities, and the other miners on the ASX higher, or whether it's actually interest within those. And that's where we look at commodity prices more in a second. But the aqua or the turquoise price here is the metals against the Aussie. We do see that it hasn't been as performing as well as it has against the dollar, but it still has been outperforming the rest of the market, and that's why this turquoise line is pointing up. We move down, quickly look at gold, because this pink line tells us the basket of Aussie gold miners versus the gold price in US dollars itself. We have seen that this has been ticking up. Often this is an early indicator for those gold stocks to run. So we do see that, without getting into too much detail here, the gold miners tend to have a greater leverage to the gold price than the gold price itself, because if they are making huge margins when the price is high, then the profits passed on to shareholders tend to be higher, and that's why you're going to have the performance of the gold miners outstripping the gold price itself. So that's what this indicator is looking at here. We do see that it has been moving since about mid-late March, again when the miners took off, and the gold miners have been participating, but we're not seeing that significantly outstrip the mining sector itself, but we do see it is slightly outpacing the gold price. Down to this yellow line, which is an interesting one, but it's the 3-year versus the 10-year Aussie government bonds. As you can see, we've had a COVID impact here, but we have seen it started to move more in favour of that 10-year. So we're looking at the prospects of the Australian economy coming out of the COVID lows, and that's sort of the inverse yield curve that we're looking at, or the inverted yield curve. We do see that it has been moving more money or more growth into that 10-year bond cycle, which is then forecasting and looking at the market ramping up in 10 years' time, and less money or less performance in that 3-year cycle. No surprises there, again, because we've got government low and those targets for the RBA and their interest rates. And we've just got the market coming online, so we do see that a few other alerts and things are popping up on the screens and moving these charts around. But the silver line here that we look at below the yellow, we've got 10-year bonds versus gold index. And we do see that money's been going towards the 10-year bonds versus the gold trading index. So this is a peak of inflation. This is looking at inflation. Where's the expectations? If we're seeing massive run towards gold stocks, then there's a concern for inflation's running rampant. But what we're looking at here is more so progression on the interest rates and less on people panicking and running towards gold for inflation. So no real alarm bells there. Then we move down to the bottom one, which is looking at inflation within Australia. This one shows the inflation bonds, the US Australian government inflation bonds versus the non-inflation bonds. So when we see this rising, we're seeing Australian interest rate expectations coming online and going higher and higher. So that's one aspect that we have seen ticking up a little bit after. So if we look at this in line, we do see that this is after. So if we see the vertical line here, we can see when the mining companies started kicking in, and then the pink line shows that gold stocks started coming online as well. And then throughout April, we have seen that the inflation's coming on. We have seen positive unemployment numbers or unemployment dropping within Australia, and that does help. And that's looking at an inflation indicator there. Now we move over to the left-hand side. I'll just move this out of the way. The camera out of the way. We'll have a look at this chart to drill down a little bit more on the metals, because we do have such a large portion of metals and mining companies on the ASX. So this top yellow line is a replication of what we saw, the metals index on the Aussie versus the Aussie and US dollar. So we do see that it is outperforming the Aussie dollar, and that's just an indication of what has been happening in contrast to the Aussie and US dollar versus the miners themselves. And then that turquoise line here on the left, we are looking at the metal miners versus the XJO or the ASX 200, and that it has been outperforming. Moving down to the next line, we want to have a look at the pink line, which is the Aussie dollar versus the US basket. Again, an important indicator on how this is tracking against the metals and miners and what's been influencing. We have actually seen the Aussie dollar been climbing against the US over this same period. So that is an interesting thing to see if you're going to break apart and see which mining companies you're going to be a part of and which thematics you want to pull and push with. Then we do see the silver line, which is the ASX top 200 versus the Aussie and US dollar. The Aussie 200 is heavily weighted towards the top 20 in contrast to the S&P 500, which is still heavily weighted towards their large caps, especially now with tech dominance. But it generally has been a broader market, and then the Russell 2000 is much more broader of the US. But as we are heavily concentrated here, we do find that when the Aussie dollar is running, the XJO or ASX 200 can be traded as a proxy for the Aussie dollar. So if you want growth to the Australian economy, you buy into the Aussie market, the ASX 200, because of the weighting. There is a huge weighting towards the top 20. So some investors or hedge funds may play that with just the top 20 or the 200. Either way, that is going to push, if you're just focusing on the top 200, the most liquid companies, the top 20, I should say, that is actually going to drag up the 200 because they have such heavy weighting. And that's what we want to see with this silver line, is it tells us whether the market has been running hot versus the Aussie US dollar. If the Aussie dollar is going up and the XJO is going up, it can be an indicator if this is flatlining, that silver line's flatlining, it can be showing, well, actually, as the dollar is going up, we are getting growth and money flooding into the markets, and that can be hot money that if that dollar turns around, it can quickly come back out. And we did see that about a decade ago as that happened on the Aussie market. The final one here is we're looking at the influences towards these metals and mining companies. So the XMM that we've been looking at, those metals and miners on the ASX, we want to see what's driving behind them. Starting off with the green line, we're looking at the copper prices, which is generally a proxy for economic growth globally. That has been climbing, so that's been positive. That's been climbing against the basket of US dollars. So that's what they're priced in, and we want to see how they're tracking against that US dollar. It has been climbing, so that is positive for copper miners, and Australia is a bit of a proxy for growth and mining. Then we move, the next one here is we want to see iron ore. It's a huge portion of the Australian federal budget, so that does help with the fiscal aspects of the Australian economy. As that increases, the revenues for the Australian government increase as well, and that does help pay back all the debt that we've got from the COVID-19 stimulus packages and the legacy that we had from 2008, 2009 and GFC that we were looking to pay back with all those budget deficits. So that has been climbing. That's positive for Fortescue, BHP, Rio Tinto and those iron ore miners. The next one is coal prices. We have seen coal-fired power plants are still coming online. They take about 2 to 3 years to come online. China had already increased a lot of those. Many came on in 2020, and they're still putting them out. So 50% of the coal-fired power plants that are coming on the globe are going to be in China, and there is still that demand despite many countries looking for a carbon neutral footprint, 2050, 2060, whatever that might be. The coal price is still going up, but many coal miners in Australia have had trouble actually following the rest of the mining companies up. Moving on to the last one here, we're looking at precious metals index in the Aussie dollar, in US dollar basket, I should say. You can see that that has somewhat replicated that gold movement that we did see throughout mid-March. The precious metal index against the US dollar basket did actually start moving before we saw the metals, the gold miners versus the gold price itself moving in mid-March. So there was about a 2-week lag there where we saw that precious metals bottom, not just gold, that did bottom and then round out and come up much higher as well. So that's us looking at the indicators and influences here. We've got many more that we do look at. We may cover them in future streams, but for now, that's enough for today. Thanks for joining us. Click subscribe to get more updates. Like the video to support the channel, and comment below to let us know which indicators you're looking at to trade the market. Thank you.